afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets are in a position of strength after wobbling in the early hours of trade. The Nifty has scaled the 11,000 mark and also trades above the 20-day moving average. What has also boosted sentiment in the last 1 hour is US President Donald Trump's statement that China has called the US to restart trade negotiations. Despite the statement from President Trump, metal stocks continue to remain top losers on Nifty. 4 of the top 5 Nifty losers belong to the metal space. The Supreme Court asked P. Chidambaram to file a new plea against CBI's arrest, says anticipatory bail plea is now in fractures. Good afternoon, Neeraj. We're at day's high. Finally, both domestic and global cues seem to be on the same page.
Yeah, I think a lot of people who on Saturday and Sunday predicted that the markets will do really well, the first 1 hour would have been biting their nails as to what went wrong. But now we're doing reasonably okay for ourselves at the highest point of the day for all the 3 key indices. And what a beautiful run it has been from a bull's perspective. If you were bullish, if you were able to get in at these levels, I think it's been a remarkable intraday journey today. The banks have done even better, 3% higher, 830 points for the Nifty Bank today. It's been a spectacular up move and nearly 27,800 for the banks. Now we were about or slightly sub 27,000. We were close to 27,000 or 28,000 on the bourse, a couple of 100 points, and we'll be back at 28,000 as well for the Nifty Bank. So banks have certainly done well, and the market breadth should be positive. The volumes very important today. Just bring up the volumes very quickly up on the screen. The market breadth is positive, no surprise there, and at the highest point of the day, by the way. For the volumes, 26,000 crores done already on the cash side. Look at the F&O volumes too, a fairly high. And on a day which is the starting day of the week, just tells you the kind of participation that we've seen today. I think we'll easily cross 35,000 on the NSE cash by the close of day, which will be quite spectacular. I'll be very interested in seeing the FI and the DI numbers in the session today. Heat map and a lot of green, very little red, I'm sure, especially as the day has gone by. Also, what's testimony is that the top loser is just down about 3%, which is JSW Steel. Hero MotoCorp about a couple of percentage points, Vedanta, Tata Steel. But look at the gainers and a lot of high beta names. Yes Bank, Adani Ports, Indiabulls Housing Finance, and then the HDFC Twins and Bajaj Finance. 3 blue chip financial names doing extremely well for themselves. ICICI Bank too, about 3% higher. Very quickly, if we can get the MRR function up for the mid cap and the small cap indices, just to show you on the cash side what is doing well today, and a clutch of names. So Reliance Infrastructure, high beta up 13%, Dish TV, Diwan Housing Finance, M&M Financial Services, Reliance Capital, Edelweiss, dotted with financial names, and ADAG is a large dominant play out there too, which Reliance Infra, Reliance Capital and Reliance Power out here. Not too many losers. Future Consumer about 3% lower, Mangalore Refinery 2% lower, but it's a day that belongs to gainers today. So I mean that shouldn't surprise anybody. In the more liquid universe, Navneet, how is the scenario looking like? Are we seeing long positions getting built?
Neeraj, finally we're getting to see some positive cues even from the futures and options market. This is also, mind you, the monthly expiry week. So we have seen some positions being added on Nifty futures, which we've not seen for the last many sessions. So as we speak, for the August contract itself, the open interest is up about 10%, and the rollovers currently, they'll start to pick up from tomorrow. Talking about Bank Nifty, where last week throughout we did see some fresh short positions being built up. Remember, the first half when the markets open, it was also a function of a short covering bounce because there were a lot of shorts sitting in the system. In Bank Nifty, which is up 3%, added a lot of shorting last week. So finally, no major build-up seen for the August contract, but definitely positions now being taken for the September contract with regard to Bank Nifty. Talking about the volatility, when we opened today, India Wix touched those levels of 18.5 or thereabouts. It was up 9 to 10%. That's cooled off quite substantially. It's below the mark of 17. Once again, a very comforting sign for the bulls as India Wix falls high from the highs of the day. Looking at the options data now, this is the space from where you are getting positive cues. When we started the day, we were seeing upside could be limited to 11,000 because that's where the maximum open interest on the call side was. And there has been intraday unwinding that we've witnessed for the 11,000 call contract. contract, which at one point of time had added 10 lakh shares, is now showing addition of only 1 lakh shares, which is telling you with the markets recovering from the lowest levels, maybe the bears seems to have cut their positions there. But heavy put writing seen at the 10,900 contract, 18 lakh shares have been added there, and also the 10,800 put strike adding 14 lakh shares. Remember on Friday also the premium for this strike was somewhere about 80, telling you the downside for the put writers of this strike could be limited to 10,720, and that's exactly what's played out. We did slip into the red, but there was buying seen from those lower levels. In terms of stock futures, pull up Marico, there's not much of an action seen with regard to stock price movement, but I was just looking at the open interest data. Interestingly, there's a lot of OI build-up that has been seen here, and also the stock's down for the 5th straight day, though it's down marginally 0.5%. Signs of shorting seen for Marico. Hemen Financial, which is looking strong, that stock's up for the 2nd straight day. It's also up, by the way, bucking the trend, up 8% for this month. Open interest build-up seen for this one on the long side. As you can see, even for the August contract, 18% increase has been seen. And finally, we've been talking about how the steel stocks have been underperforming, and Tata Steel touching fresh 52-week low. Signs of shorting visible here. The stock's down 20% in the month of August so far, and the futures indicate even at current levels, maybe traders are willing to bet on the short side.
Okay, stick to the globe first. After ratcheting up trade tensions, Donald Trump now says China has reached out seeking to restart trade talks. The US president, who's attending the G7 meet in France, made this comment just hours after he had said he regrets not imposing high tariffs on Chinese goods at the onset. Hear him out.
We'll see what happens. It's all very new, and they're under a lot of financial stress. We put sanctions. Secretary of the Treasury is here right now, and he's really very expert at what he does, and he's done a very effective job. They used to say that, look, we are the largest economy by far in the world. When I became president, we were heading to be the 2nd largest. China was going to overtake us. Not going to happen. Not going to happen anytime, I'll tell you when I'm here. Can't happen. We picked up $20 trillion in worth, and China has lost 20, 25, $30 trillion in worth. We're now almost double the size of the economy. If I hadn't won, our economy now would have been overtaken by China. And all these clowns that are sitting on television that have been running this government for many years, that have been taken to the cleaners by China, they're all sitting there saying, well, I don't think the president is negotiating properly. They don't know what they're talking about. I have great respect for the fact that China called, they want to make a deal. I have great respect. And I have great respect for President Xi. And I think we're going to have a deal because now we're dealing on proper terms. They understand and we understand. But that's a great thing that happened. And they want to get something done. Now, maybe it won't get done, but this is the first time I've seen them where they really do want to make a deal. And I think that's a very positive step. And as far as Iran is concerned, that was with great respect. And I spoke to President Macron yesterday, and I knew everything he was doing. And I approved whatever he was doing, and I thought it was fine. And I think it's too soon to meet. I didn't want to meet. I said, I don't want to meet right now, but it's soon going to be time to meet with Iran, and it's going to be a great thing for Iran. They have a great potential. Iran has great potential. You know who else has great potential? North Korea. Kim Jong-un. And under his leadership, North Korea has great potential. And I don't think North Korea wants to blow it.
Well, those comments led the S&P futures to erase the losses. Pull up the European indices as well for a moment and just show you what's happening there. Friday was, well, devastating for US, not so much for Europe. It was down about 1.5%. But in today's session, after these comments that have come out, the European indices, mixed bag, but not reacting too negatively. Let's discuss the implications of all of this. Jingyi Pan of IG Asia and Richard Harris of Port Shelter. Both of them join us. Thank you so much for taking the time out, both of you. Jingyi, in light, I hope I'm pronouncing your name correctly, but in light of the to and fro that has happened over the last 3 days, what implications do you think the same holds for the equity markets? Will they buy into the belief that there might be a deal soon, and will that be viewed positively, or do you believe there will be nervousness?
Well, good morning and thanks for having me here. So really, I think if you look at the market situation, it's been quite a bit of a volatile situation. Evidently, I think, what you just played to us, the fact that we have President Donald Trump saying that there's going to be talks with China did lift the sentiment, but I think in terms of the uncertainty for the economy, it certainly sustains, and thereby for the equity market, I think there is a sense that this kind of uncertainty could continue plaguing the situation. So if we just, highlight the fact that, I have seen that this morning, to clients that we've been showing this chart that is showed the put to call ratio for the S&P 500 index certainly risen once again above mean. Quite a bit of, if you look historically, preluding a bit of more sharper downturn for the market. So I think this kind of fear and the sentiment in the market could really keep the bias towards the downside. As far as what we have for IG client sentiment, we've certainly seen that retail contrarian, interestingly, at this point of time, isn't really the case. And in fact, the market clients for IG itself broadly has been actually shorting the S&P 500 index in the sense that seeing expectations for further downsides likely.
Okay. Richard, what's your sense? The world markets have recovered a little bit. That's, of course, led to India doing well. We'll talk about India in a bit. But with the to and fro that we're seeing and something that we've seen now for the last 3 months, to be honest, do you think the equity markets will buy into any kind of positive voices, or will it remain circumspect until a final deal is reached?
Well, no, there's obviously quite a lot of headwind there, as we're seeing. Having said that, the recent earnings cycle in the US was quite positive. So, there are some green shoots out there. But I think the key of it is really exactly what is President Trump doing and what does he want. We all know he's a consummate negotiator. We all know he'll say one thing and then do something else. And if you just listen to that piece that you played, his range of topics was enormous. He jumped from China to Iran to North Korea without drawing breath. And you have to wonder sometimes quite whether any of this has been thought out or any of it has been policy. Over the weekend, he talked about putting tariffs up. Then there was a phase over the weekend where we weren't sure whether he was going to do it. Then he said he wished he'd done it more. And today he said China is asking for talks. Well, to be honest, we don't really know if China went out and asked for talks or whether his side went out to ask for talks. But I think what the market will do is it will see it as good sign that there are talks happening. But I don't think there are any real observers out there who expect that we're going to see the magic wand waved and everything's going to be fine overnight.
Point well taken, Richard. And the uncertainty regarding the trade war still lingers because this also has led to talks of recession. We've already seen inverted yield curve in US. Where do you think equities market will head then? Do you think remainder of the year would be about risk off trade and monies could be moving in safe haven asset classes like gold?
I've actually thought that we've probably seen the best of the year's movements. We had a pretty good first half, and that even extended a little bit into July, especially in the US. It has been quite so good in other parts of the world, and I think we're likely to tail off. We're probably overdue for quite a decent correction, or maybe just even dipping into a bull market, say, as we saw at the end of 2018. But I don't think we're in dangerous territory yet. I think there are still enough brightish signs in the world economy. After all, there are very few places actually in recession. And unless we talk ourselves into recession, I don't think we're going to get there anytime soon.
Jingyi, my next question is on the currency market. We've seen depreciation coming about for the emerging market currencies, which is, of course, as a result of trade war fears, which is still there. We've seen Indian rupee, by the way, today crossing the handle of 72 to the dollar. Do you think this could also lead to a sort of currency war, which could be a bigger problem for the global equities?
Say that with regards to the currency market, evidently the de-risking within the market has certainly seen to Asian currencies broadly declining against the US dollar. But I would say that this is over and above just what we're seeing with regards to the trade war, as it is a slowdown in terms of the global market growth itself. Also leads to generally this trend of seeing the dollar Asians itself strengthening. And I think what we are seeing at this point of time is a build-up of both of which, the fear that the US-China trade war is going to seep further into the trade and growth concerns across the market. So on that sense, I think, certainly, I think that the trend itself may well sustain, but so much so I don't think it's, at this point of time, the market's looking at a protracted trade, currency war, I should say. Well, we did have a bit of this market shake-up with what we've seen in the yuan declining against the US dollar, but at this point of time, it certainly does look like the market really isn't getting too much perhaps from this end, but instead really falling back too much, seeing the US-China trade conflict being a greater driver on hand.
Well, Indian rupee so far in the month of August has weakened nearly 4%. But let me take a view on India. Richard, there was a slew of measures being announced by the finance minister on Friday. And I think the biggest which the FI community was looking at was the withdrawal of higher surcharge. What have you made of the announcement which were made to stimulate the demand back home because of the economic slowdown?
Yes, I saw the announcement. I kind of thought that it was more technical rather than a real reason for foreign investors to move back into the country. And I think the bottom line is, if investors feel that India is looking positive and there are things in favor of the market, then I think that investors will move back in. So I wasn't quite as sure that was as positive a move as the rather more negative moves that we've had in the previous budgets. But I think that India still has a reasonable chance of standing out among the EM crowd. China clearly has its own issues, not only with trade, but also in terms of keeping the economy going internally at the lick that they've had previously. Other Asian markets have issues, especially if they're connected with China and that sort of move. India has the benefit, too, of if we do see a slowdown and a weakness in the oil price, there's a bit of an oil dividend there. So I think if you're looking at emerging markets as a pool and you're looking at which markets would you like to think might rise to the top, India is probably one of those.
Richard, in which case that's the other question. I think the point that you are making, Nomura extended this point earlier in the morning when they said that they upgraded India to a higher rating, I think an overweight rating, because they believe that with the global trade crisis taking center stage and the Indian government showing signs of recognizing that markets and economy both are very important, India might actually stand out as a port of call for foreign investors as well. Do you reckon that the next 6 months or the next 5 months of the current calendar might be better or the last 4 months might be better than what we've seen in terms of FI participation in India hitherto in the year?
I think, once again, it's going to depend very much on what happens to world markets. If allocators feel that they want to risk on a little bit, then they'll probably look more towards emerging markets. And I'd like to think that investors are getting a little bit more sophisticated as not to look at the emerging markets as one block, but to start looking at some of the major economies within that and picking them out. But I think that the key thing is going to be that asset allocators looking to put money into India need to feel fairly confident about their own markets before they then take a bet on somebody else's. And that's probably going to be the biggest driver towards foreign investment.
Okay, Richard as well as Jingyi, we'll leave it at that note. Appreciate both of you joining us today and taking us through your views on the global markets as well as India. Well, as we speak, Nifty's crossed 11,050 as well. We're sitting at day's high. Strong gains seen for Bank Nifty, which is up almost over 900 points in trade, inching now very closer to the mark of 27,900. All right, as we are talking about the global markets, President Trump's comments have also spurred sentiment in the Indian markets that had begun expiry week trade on rather somber note. This despite a slew of economic measures announced by Finance Minister Nirmala Sitharaman on Friday evening. So what is the likely road ahead? Let's ask Pramod Gubbi of Marcellus Investment Managers. Hi, Mr. Gubbi. Good afternoon to you, and thanks a lot for joining us today on Bloomberg Quint. What looked like more of a dead cat bounce in the morning. Finally, we're back in the green, and this also comes after some commentary coming in from the U.S. once again, where U.S. President has mentioned that China wants to return to the negotiating table with regard to the trade war. What have you made of the recent comments which have come from the U.S. US, and also the measures being announced by Finance Minister Nirmala Sitharaman on Friday, how much of a sentiment booster that is for the markets?
Well, I'm not sure about the U.S. President's remarks, given that we've seen this in the past as well. And remember, next year is an election year in the U.S., so there is a political imperative to maintain this sort of an issue at the highest level. I'm not sure how much we read into this. But yes, I think the Friday's events are much more important and much more positive for India, because I think a lot of the problems with our economy and the markets were self-inflicted in some ways, and a reversal of those would certainly help boost sentiment. It's not in terms of capital flows just to reinvigorate animal spirits in the economy, where business people and investors start looking at the country and the economy more positively and start economic activity, which is unfortunately caught in a logjam of sorts currently. So we'll need many such sentiment boosters to get us out of this downward spiral and perhaps move up into a self-fulfilling virtuous cycle.
Mr. Gubbi, the first dose definitely is working for the markets, and the FM also highlighted these are just the first set of measures which are being announced, and of course in the next 2 weeks they will be announcing more measures. They also highlighted the issues related to the realty space. Probably the next set of measures could come about from that. But what would your approach be now to market? Should one wait out for more measures to be announced, or do you think this is the right time for one now to position themselves?
Well, to the extent that timing is the hardest aspect of investing, it's very hard to get that bit right. So to that extent, we always prefer to stay invested, especially in the companies that we like. And given our own philosophy of investing in companies that tend to do irrespective of the macro, from our perspective, that question is a little bit irrelevant. So we are completely invested, and we continue to invest even now. Whether this activity picks up or not, the underlying companies tend to continue to grow their profits, and that's what we're more interested. But yes, if we get a little bit of sentiment booster and pick up in the economy, even those profits will grow much faster than what they're doing. So we'll continue to invest in the companies that we like.
Would that also include the auto space, which is witnessing its deepest contraction in the last many months? Some measures announced for that space as well, though the industry is hoping for the GST rate cut, which of course cannot be announced by FM. It has to come in the GST Council meet, but higher depreciation and some of the other measures. Do you think that's enough to revive demand in that space?
Well, for starters, we don't have any automobile stock in our portfolio. Having said that, I think at some stage the sector will become interesting. It is a cyclical sector. We need to accept that downturns such as these are part of investing life if you're keen to look at this sector. The question any investors interested in this sector need to ask themselves is, are stock prices factoring in the sort of downturn already? Or is there further room to go as far as fair values of these companies are concerned? But otherwise, the sector is bound to come back. I think demand for automobiles will recover. Whether it's 2 quarters away or 4 quarters away is a matter of debate. But the definition of a cyclical sector, it is bound to go through cycles. We've seen the downturn. At some stage, we will see the recovery as well.
And what about the PSU banking space? The upfront release of the 70,000 crore rupee recapitalization amount, which was announced in the union budget. Now, that's going to be released in the first half of this fiscal year itself. Do you think that's going to be enough to revive the credit growth, which people have been complaining about?
Well, there are 2 aspects to it. One is the credit growth is sort of demand side inflicted as well. It's not like there isn't much liquidity in the system. It's more because the banks that are sitting on liquidity are not willing to lend because their assessment of credit quality is a bit ambiguous in the sense they're painting most borrowers with the same brush, and rightly so, because it's hard to see what assets are good or bad at this time of the cycle. So it's all about getting that confidence back to the lenders, providing them a framework to evaluate the good and the bad, and at least handle liquidity, especially in the NBFC sector, which has been strapped for funds. But yes, and given that the public sector banks to an extent are do follow some of the instructions from the government, they might be a bit more open towards kickstarting credit growth. As far as investing in the PSU banks, it's exactly for these reasons. If the credit story is beyond just assessment of risk, we would tend to stay away from such banks. At this stage, I think, yes, there is perhaps a tactical play because the next few quarters credit growth might recover for PSU banks as a whole. But for us to take a look at PSU banks very closely, we would want to see many more structural reforms in terms of governance, incentive measures, so the competitiveness compared to the private sector banks is restored, and they can compete on an even keel.
Pramod, Neeraj here, just one quick question. You usually buy companies as per your investment framework, the good, clean, great return ratios, etc. Currently, the ones which might be available at maybe a bottom of a cycle would be the likes of metals, for example. Do you look at this cycle at all, and do you study the metal companies to try and figure if it's a good time to buy them?
Unfortunately not. It doesn't, by definition, again, nothing right or wrong about that sector. It's just that it doesn't tick a crucial box in our philosophy, which is goods have to be essential in nature, in the sense it has to be part of a basket of goods and services belonging to the common man. To the extent that commodities and metals are cyclical in nature by definition, it doesn't necessarily meet our requirements for investing, and we've stayed away from it. And moreover, metals is a global commodity. We don't believe we have the ability to get a sense of global demand and supply, which drives these metal prices, which are also crucial for the underlying stocks which produce or trade in these metals. So honestly, we don't have the sort of skill set to be investing in metals and commodity sectors, and hence we prefer to stay away.
Very interesting thoughts out there. One final question, Pramod. Would you go out and buy any of the auto angs? There was a thought that was expressed earlier on in the week, last one, that if indeed the autos were to bounce back, then the contractors, because they're able to do this so well, will be able to get out of the muck faster. There's also this resale market accompanying them. What do you think?
Yeah, sure. So auto ancillaries, I think, is a sector that we are paying some close attention to. There are a few handful of really good companies run very well. Of course, they've been exposed to the same sort of downturn that the OEMs have seen. But exactly for the same reasons that we talked about, there is a replacement market which gives some sort of a cushion. At the same time, times like this is when the weaker players in that industry tend to fall by the wayside. And on the recovery, there's an element of consolidation in the vendor space, and the vendors who are standing tall tend to take a larger share of that recovery. So yeah, it's one of the sectors which we are paying close attention to.
Okay, Pramod, always appreciate you taking the time out and joining us today. Thanks so much for doing that today as well and giving us your thoughts.
Most welcome.
That's the view from Marcellus Investment Managers, clearly steering away from metals and some of the other themes as well. We'll talk about some of those in just a bit, but while we were talking to Pramod Gubbi and while we've heard him out, let's also listen into some of the other leading market experts that we spoke to earlier today.
I think we'll see a little bit of how the global economy plays out in terms of global markets, because there's a lot of insecurity there. I don't see, to be honest, even with the change that foreign portfolio investors are going to rush back to India, given what they're waking up to at the moment. So I'd just be a little bit cautious on there. As regards Category 3 hedge funds, I mean, obviously, for foreign investors, you're charging derivatives as a capital gains tax, and you're not doing it in India. Seems slightly odd to tax your own funds higher than foreign investor funds, but hopefully we'll get around that somehow.
India has been underperforming global emerging markets even in the last couple of months. So that level of underperformance will correct itself. And secondly, in a global environment of very high uncertainty caused by a very volatile trade war, between the two superpowers and the slowdown in the developed economy, India's growth revival should stand out. All of the doubts that have been creeping up in the minds of investors, in the minds of companies, in the minds of the SME sector, just the feeling of mistrust, the lack of cash, or at least a feeling of lack of cash because the government has not been paying its bills. All of those will work to a revival of the economy in the second half of the year. From the equity market standpoint, a lot of the irritants have been taken out.
Okay, those are some market voices giving their opinion on what does that mean for the markets, the slew of measures which were announced by the finance minister on Friday. And clearly on the screen, I think it's a thumbs up for now because we've got some cues, positive cues coming from the global markets as well. 11,050. Remember, whenever there was a pullback on Nifty, it did fail to touch the 20-day moving average. But in today's session, Nifty is firmly trading above the 20 DMA, and Bank Nifty is up about over 900 points in trade. Good time to bring in our technical experts on board and get their view as to what sort of trades can be taken in this monthly expiry week. We're joined by Hemen of KRChoksey, who joins us right here with us in the studios, and also on the fundamental side, we're joined by Kalra of Target Investing. Good afternoon to both of you. I mean, let me come to you first. I remember your view was markets are oversold and you were sticking to buying some calls, I think 11,000, 11,100, 200. It may have worked out in today's session, but also now this is the expiry week. You'll see time decay happening. What should be the right approach at current levels?
Frankly speaking, if I look at the stop loss in futures, Navneet, from an intraday point of view, it's too far away. So I wouldn't like to trade something which is higher for whatever reason, 400 points from Friday's intraday low. Yes, we are looking at an upside possible. It was coming, it took its own sweet time, but so I'll stick with the same thing. I'll still buy the 11,200 call option because I would not like to trade the futures at this point in time. I have a feeling we'll go up, come down. See, I think finally net over the next couple of weeks, if the bounce is going to sustain, I'm looking at 11,234 and finally 11,300 max. I don't think there's too much of an upside in terms of price, but there is some time upside. It could take a few weeks, so I shall go with the same thing. But I won't buy fresh futures now, and shorting is not on the cards. The way we are, I think we're going to expire above. So I think the expiry will happen above 11 or at least 10.9. So I think they'll squeeze the short seller this settlement.
Yeah, no, you won't expire. No worries. I think we'll all last. But good call. I mean, last week itself on the 11,200 call. What would you do with the Bank Nifty? It's up 1,000 points.
See, frankly speaking, I think it will do the same thing. I'm not sure that there's too much of a difference as far as from a longer term point of view, Bank Nifty is a shade better. But once again, I'd still reiterate. It's a pullback, it's a bounce, a recovery, not a rally. Maybe it lasts for 2 weeks, maybe it lasts for 3 weeks, maybe we see 11.3, maybe we see 28,500 being crossed as far as the Bank Nifty is concerned. Neeraj, over the next few weeks, if this bounce is what I think it is, then the intermediate, the swing high for the Bank Nifty was 28,602 in the week ended 9th August, Neeraj. I think that will get tested or crossed. After that, all bets are off. Whatever we go is bonus. So I still maintain and reiterate, the recovery, not a rally. And after this, we'll see Friday's lows being broken, but this could happen late September or early October.
Okay. Well, so that's the call on the indices. Hemen, you want to fill us in with your stock recommendations as well?
Yeah, I think, frankly speaking, it's a savage bounce back. So suddenly everything starts looking very hunky-dory. But yeah, I have a buy on Apollo Hospitals, Neeraj. It looks quite promising, and I believe that it's one of the few stocks which is in a probably medium and even a longer term positive chart makeup. So at 1460 stop loss, I just need to change it, 1450, target 1480. I just need to correct that, sorry. And the second stock is L&T. Once again, I think it's a deep oversold situation. A bounce which was coming has finally come through and will probably continue. So it's moved up a bit. I'd wait for a small intraday cool off, 1330, 1320, 1350. All trading plays for a few trading sessions before the expiry news.
Okay, those are some individual stock ideas from Hemen. Remember, for Apollo Tyres, he said the stop loss is at 1450. Okay, let's also bring in Meghana Malkan of Malkansview, who joins us on the show now. Hi, Meghana. Good afternoon to you, and it's good to have you on the show today. What are you doing right now at current levels? Markets did give an opportunity to traders, at least in the morning, when we slipped from the highs and we're back above the mark of 11,000. Would you take a fresh bet now?
Hey, good afternoon and thank you for the welcome. Well, I believe when we hit the lows last week, there were a plethora of supports that were going around that area. Nevertheless, the sentiment was, of course, not too much positive last week. But having said that, the news that was announced and the way the market has reacted is again a confirmation that the support is doing its job, and that's how it's been. So when we opened in the morning and we went below Friday's low, there was a bit of nervousness, but I think now the market has picked up well. And the best part is it's now trying to trade above the 20-period moving average, which is a very good sign. So I believe, yes, I would not hesitate to go long on a few of the sectors at this moment. But on the index, I believe closing about 11,150 would give an added confirmation that the support has done its job well.
Okay. Meghana, do you have a view which is strikingly different? Good afternoon, Neeraj here. You have a view which is different for the Nifty Bank, and is there maybe an option strategy that you would deploy here?
Good afternoon, Neeraj. Well, as far as Bank Nifty is concerned, I believe, yes, it's again showing the strength, not as good as Nifty, but yes, certain PSU banks have been doing good. So I believe Bank Nifty does have potential to perform well. Option strategy, I think the safest thing right now to do is to adopt a sell strategy on the bottom. But at this moment, I believe it's a little high risk. Maybe I'd wait for the Bank Nifty to retrace by a couple of 100 points lower, around, I'd say around 27,000, 27,200 levels for it to confirm, and then take the option sell call here again.
Okay. And what about specific stocks, Meghana? Any ideas that you would recommend at the current point of time?
Well, on the stock front, the stock that I've been following and I've been trading long since a couple of weeks is Aurobindo Pharma. I think it's perfectly poised, though a couple of other stocks have been also doing good from this sector. But I think Aurobindo Pharma is based at a perfect low-risk trading zone right now. If you see the weekly chart, we had a big white candle pattern 3 weeks ago, which the low is still standing. We haven't moved below the mid candle of the big white, which has been a good support. The volumes have been good, and on the daily charts too, we've seen a good consolidation happening since the past few trading sessions, which is a good sign. So I believe this is one stock which you could buy at the current levels.
Okay, stay on. Let's get in a fundamental view as well. Samir Kalra joins in. Samir, you hoping for this rally to subside soon, or are you going out and buying and deploying some cash?
Not deploying any cash because on the press conference and the measures which they have announced, they are very passive according to me. So there will be a stimulus announcement and a response time, and that response time might take longer than what people are expecting now. So I think it's better to, if you're a long-term investor, I would rather liquidate more, because I don't see fundamental data changing anytime soon on the kind of announcements which they have done. And
the
second,
FPI surcharge being taken out, you don't think that's a positive?
So again, that's a bounce. So that won't fundamentally change the dynamics of the markets or anything, because even if you see the various surveys done at that point of time when it was an issue, everyone pointed out that it's a 10 to 15% kind of issue. So maybe 11,200 or 300, like Hemen is saying, you might see that kind of a bounce. And for that, the only thing is, as a long-term investor, I would really not buy at these kind of valuations. I would rather let the data change. Maybe I'll skip a quarter and then start buying on the fundamental basis, because then I'm buying for 5 years or 6 years onwards. So even if I miss a quarter, I don't miss by much. But calling a bottom out here on the numbers and on kind of a news-based system.
No, sorry. I mean, just one question. I'm sure Navneet has more, but I'm not asking about whether or not this is a bottom and from here the markets will rally. But a lot of stocks were really butchered, right? Because the sentiment was extremely negative, more so exacerbated by the belief that the government is not listening, not paying heed to the markets. That has changed, right? Now India, in terms of the view that FPIs might have, and whether the government is looking at the markets as seriously or no, that has changed. So there is parity on that front.
So there is some kind of parity, but even if you see the automobile sector, what measures they've announced, right? That really doesn't boost the demand. The only point is if my depreciation is increased, but that is only for fleet operator, let's say. And that fleet operating is already 50% capacity
Registration
utilized.
costs being pushed to 2020.
See, then you're giving me a deadline. Earlier there was no deadline.
Yeah, but at least it's not happening right now.
You could have pushed it to December 2020. BS6, you could have pushed it to 2020. But the only point is your willingness is only till March, and you're saying only short term. So my only point is, even if you're giving some kind of a relief, you're giving it timeline relief. Then you're expecting the whole reversal will happen during that time. If it doesn't, then what? So, and plus you haven't given any indication of loosening out the purse. You're not introducing the scrappage policy, which was clearly mentioned, on the basis that the infrastructure is not there. But my only point is, why will anyone invest in the infrastructure if your policy is not there? So it can work vice versa. So I feel it might be a bounce to more liquidate your positions rather than buying in, or a trader's upside.
Okay. That's the view coming in on autos. Do you think it was more of a reiteration what came in with regard to announcement, barring increasing the depreciation and lifting that ban for government agencies to buy new vehicles, and stating that BS4 registration will continue post March 2020 as well?
So it was more of putting the pen where the words were coming in. So they have cleared now the BS4 can be
But that was always the case, right? There was just some bit of ambiguity around
there was
it.
ambiguity on the base of Supreme Court giving a decision that January onwards you should start destocking your BS4. That's where the auto OEMs were getting worried, because the timeline got shortened. But that's what my point of view is. These measures really don't boost up the consumer end of the demand.
Okay, but one factor you have to give it to them, which will boost some bit of, which has given a sentiment booster, could be the FPI withdrawal. Almost nearly 30,000 crore of outflow was seen from the FPI community since the budget. I was just looking at the data, and it'll be important to see what happens today. And from also hereupon, can't rely on one day's data as well. But one sector, Samir, which is still, seeing selling pressure, that's the metal space. We've staged a sharp recovery for the markets, and that's in light of global backdrop as well. There's a lot of uncertainty. How do you approach that space?
So I think earlier it was only global backdrop which was hurting the metals. That was like 30 to 40% kind of a downside issue. Now you have domestic issues. If you see, pick every auto anch or auto company, they make up a 10 to 20% kind of a demand for steel and aluminium. Now, if that drops out to a production level of, let's say, 30% or 40%, that eventually hurts out the domestic inventories. So that is another pain. And the third pain which is coming on their books very largely is the capacity expansions which they've done till 2018. Let's take JSPL particularly, then SAIL. Whatever the capacity expansions they have done, that is not being utilized. And that is hurting the balance sheet as well, because you're not able to make up for the cash flows which you need to repay the interest payments which are coming along. So I think there are more domestic issues for metals right now rather than global. Global might hurt them even more, but I think incrementally now domestic issues have become a more pain for them rather than the global ones.
And maybe some pertinent points are there, Hemen. If you look at the metal names today and how a poor performance they have shaped up throughout the day, despite the markets by and large looking okay, is there a trade or a continuation of a trade that you would do on the short side for any of the top 4 index stocks, Vedanta, Tata Steel, JSW or Hindalco?
They continue to remain in downtrends, Neeraj, but no, I would rather not trade, because I think they're going to go down and we have a unsustainable market recovery in place. So if in sympathy it does something, I wouldn't like to second guess. Technically, we're weak. If you look at JSW Steel, Neeraj, we've posted a fresh low today. This is also, I think, 2.5 year low or something. So the inherent weakness hasn't gone away and it continues to persist. So I'm not sure if I would be comfortable going long. Yeah. And
now I was wondering if you would go short, or if you believe what are the levels that you would see on the downside.
Okay, so I'd stick my neck out and say I won't go short, but I'll go long.
At some point of time.
Yeah, in the next.
Not right now.
Right now, I'd probably buy a out of the money call option for Tata Steel next month because 2 days it'll probably going to waste away. But a couple of things, Neeraj, if you just give me 2 minutes. 2 crore cash market volume on the NSE as far as Tata Steel is concerned. This is the highest volume in the last 8 trading sessions or 9 trading sessions. Indicators buy on the hourly, 2 hourly, 4 hourly, daily. So I think there's a ungainly, silly looking bounce coming in sometime. Whether my only worry is, does it happen till Thursday or it happens post Thursday?
Okay. Well, let's wait and watch. The other 2 stocks, and I would want a fundamental view there as well, but Meghana, to you first on the SL Group stocks, and no, not SL Propack because that's a completely different entity, but both Dish and Z. Now, maybe the lenders get the monies in the next couple of days, maybe they don't, we'll get to know, time will tell. But both those stocks in line with the market momentum have done reasonably okay. Do the charts suggest any kind of trade on either a Z or a Dish?
Honestly, if you see Dish TV, it's all trading within a very narrow zone. And if you see the momentum too, momentum is literally below. It's moving into the negative zone, so to say. And there's no chance. There is no opportunity that you can spot. There's no confirmation either on the price or the volume to say that there could be some kind of action that could happen here. So Dish TV certainly out of question now to take any action into. Z TV is trying to manage. If you see the higher time frame charts, they seem to be not breaking the support. They seem to be trading near the support, though the volumes have been dry. But the very fact that it's not breaking the support level on the momentum could be an indication that it could be an indication that's trying to make the support work. So we could see an up move from here, but a very dead one. I don't think there's much happening here as well.
Okay. Samir, you want to comment on the SL Group stocks and whether Z or Dish provide you an exit or an entry opportunity, or you would leave them alone?
So I think Z specifically, I think provides, in this kind of a relief rally, provides an exit.
Exit opportunity.
Yeah, for me, exit opportunity if I hold right now. Because if you see the subscription data is being more related inter-group kind of dependency. The advertising growth really shows how the whole industry is growing, and specifically the company is able to push through the volume and the pricing. That is not very encouraging given the valuations right now. And secondly, the more valuations, even sustainability is dependent on a strategic investor coming in. I don't think so the whole Oppenheimer kind of a transaction can support a further value upside for them. So I think over here it becomes more of a top rather than a bottom. And for me, next 3 to 4 quarters, I don't see advertising revenue going drastically up, whether it's Z or Sun TV as well.
Okay, that's Z for you. Remember, the deal with Oppenheimer is at 400 rupees, and since that deal, we've not seen that price for the stock. It's still trading below that mark. Just want to highlight few Nifty gainers, and they are your heavyweights. HDFC Bank. So the twins are sitting with gains of about 4% respectively, and even the Bajaj twins have gone up. Bajaj Finance is up about 3.5%, and of course the sort of move that we've seen for Bank Nifty, the heavyweights in that I've already highlighted banks. So even ICICI Bank is trading above the mark of 400. SBI is now up over 3% in trade. Meghana, any of these banking stocks, we've already taken your view on Bank Nifty, but the constituents of that, ICICI Bank, HDFC or SBI, is there anything which is looking good on the charts where you would advise taking position at current levels?
Well, on the private sector, I don't really see anything good happening. Bank of India is one stock that I was tracking for quite some time, but even that one has been out and out through a very long consolidation, and it's nearing on the lower support zone. So I don't see anything much happening on the Bank of India as well. State Bank of India, if you ask me, that is something that I'll wait for to get an opportunity in the near future, because even though it's broken the recent support, it's at a very important support. So how it plays around that support, especially on the price and volume front, is going to be very interesting, because if it does respect that support and does come up from there, I would do assume a shorter intermediate term move on the upside happening in State Bank. So that is one thing I'll be monitoring closely in the coming sessions.
Okay, remember the stocks which have gone up sharply are also those stocks which had fallen as well. So they are all your high beta stocks from the likes of Reliance Infra, which is up and about. IDBI Bank is up about 12% in trade. Well, we've also seen gains coming in for Divan Housing, which is up now 11%. Dish TV, which we already highlighted. And from the banking space, Yes Bank is up 5.5% alongside RBL Bank, which has seen gains about nearly 6%. Before we move on from the topic of banking, Hemen, anything from the banking space, Yes Bank, RBL Bank, or the entire universe where you would do you see any trade here?
Yes, I think State Bank also, Axis Bank also, and RBL also, because all of them are going to move in tandem, very similar patterns, Navneet. But the thing is, some of them have moved quite a lot, so I just prefer to wait for a small cool off. But yeah, I think State Bank or RBL Bank can be a long trade.
And in the financial space, Hemen Financial is up for the second straight day. I was just looking at the data for the month of August. It's up 8%. Longs have also continued here. How is this one looking on the charts?
We've given an upward breakout from an ascending triangle, which is pretty surprising. Not surprising in the sense because we remain unequivocally in a longer term downtrend. But yeah, so in the near term, we are at 330. The breakout level was 326 Navneet. So I wait till these are cash market levels. I'll wait till 326, go long with a target of 340 or 345.
Okay, 345 is the target which Hemen is giving on Hemen Financial. JTKT India is locked in upper circuit with gains of 20%. The other auto ang Subros is up 14 to 15%. Samir, I know we've already discussed autos, but on the auto ang, if my memory serves me right, I think you had given a call in JTKT India at one point of time. It's up 20% now at these levels. Would you advise buying into auto angs?
So I think these are maybe opportunities for the people who never owned auto angs in that sense. I think it's a good place to start a SIP in that. Maybe a Subros, JTKT, to a certain extent, maybe a Igarashi Motors. So these three are more technology driven, even for Bosch. See what happens in auto angs, you have to have technology to amend and move ahead. And that's where parentage or the history really matters. And I think if you see all these three, now they have a good MNC partner somewhere or the other providing the technology to move forward. And I think they'll do well on a sustainability basis. Even on the balance sheets, they are better off. So I think it's better to do a SIP mode in all these four names if you can. That's where you will make money in the term horizon of a 5-year kind of a period.
Okay, so those are auto angs for you. Marico, we addressed the stock, which is down about 1% in trade. Hemen, I'd like to come to you just solely on basis of the open interest action that we've seen at 376. This has been an underperformer in last 5 sessions. Do you expect more downside for Marico?
Actually, logically, if everybody was hiding under Marico and HUL and the Daburs of the world, I think they will face selling pressure because everything else has started moving up. But yeah, coming specifically to Marico, Navneet, you know, we walked into the previous all-time high, which was at 396 of December of last, and we've not closed above that even for a single trading session. And today we are taking support on the 55-day exponential moving average. These are cash markets. So I have a feeling that yeah, we've cooled off, and but I think it should be limited. And logically, if the everything else is going up, I think the defenses had to come down. I mean, they had to do a yin and yang sort of a scenario.
Okay. Meghana, before we let you go, the 3 blue chip names, all of them are up about, all of which are up over 4%. HDFC Bank, Bajaj Finance. Which chart looks the strongest for a trade, if any of them?
Well, I believe HDFC could be the one that I pick because if it's the higher time frame chart, I don't see much damage that's happened in this stock as compared to its the other counterparts which we just mentioned. And also, the momentum in the weekly chart seems to be holding. Weekly 20-period moving average, which it tried to breach last week. If you see the action for today itself, it's trying to just about move about that level. And the volumes, if you see on the market rise, have been better than on the down day. So all these factors technically, I think, make this chart the less weaker of the other three, I believe.
Okay. And lastly, some of the slightly weaker hands are doing very well today, Meghana. Before we thank you, any thoughts on from a trade perspective on a Rail Infra, Diwan Housing, Delta Corp, for example, up about 7%?
Well, from these, I have been tracking Rail Infra quite closely. I believe, yes, what we're seeing today could be a shorter-term, respite to what has been happening on the market. But the momentum here is definitely trying to push up on the higher side because what the price did was trying to tag the lower part of the volatility bands. But the way it's come up and with the volume that we've seen on the rise in the past two trading sessions is certainly an indication that the stock is poised for a shorter-term up move from here. So what I do is I'd wait for the stock to retrace maybe a bit about 5% on the downside. That could give me a good opportunity to capture the short-term move if I had to.
We'll leave it at that, Meghana. Thanks much for taking the time out today and joining us and giving us your perspective. Appreciate your time. That's the view from Meghana Malkan. The market's still looking rock solid, 27,904. I mean, maybe a few hundred points here and there for the Nifty Bank, but it's still about that 945 odd points for the Bank Nifty. The US markets should come up on your screen. Remember, Europe is doing okay as well. So the world markets are not an unhappy place as we slip into the break. Keep that at the back of your mind. But as we slip into this break, hear out what Basant Maheshwari thinks government's relief measures may do or may not do to the markets. He, of course, believes that it may not pull the market into a bullish scenario just as yet.
I don't think that the FM has actually left the patient to die. He's been given some treatment, and broadly, if you look at the announcements on Friday, it was twin focused. So the first thing they tried to address was the stock market by removing the surcharge on the FPIs and other things. And the other, and more importantly, they tried to rectify the underlying economy. From October last year to this period, the real link failure in our economy was the NBFC crisis. So initially we thought, let everybody fail, because that's the mantra of capitalism, not realizing that the temple of capitalism, which is the Federal Reserve in the United States, did exactly the opposite of what the capitalism textbooks teach. In 2008, they went along and they tried to provide a backbone to almost all the defaulting agencies by picking up the toxic assets. So when there is a problem, you have to deal with the problem the way it has to be dealt with. Of course, it would have been great had all these been announced maybe last year and say about November, December, but then you cannot just sit back and say this could have happened or that could have happened. So coming back to it, I think the real important part about the message on Friday was that we are concerned about the economy and we are concerned about the markets. Like we always keep saying, if you're just concerned about the economy, the markets will take care of itself. But it's great to see that the minister is concerned about both the economy and also the market.
Would you believe that Friday's moves restore India to a bit of a parity with regards to the other world markets, in that there are no big negative overhangs in terms of taxation and having a government which is not responding quickly enough? And therefore, is it business as usual? If the markets fall, global markets fall, our GDP doesn't improve, we fall, but it won't fall at a faster clip than the rest of the world?
No, I think the markets won't fall for two reasons. One, at least the markets have got a sense that there's a government which doesn't want the market to collapse. And secondly, and importantly, the FM has said that there are two more announcements to go. So unless those two announcements come, nobody would like to go short left, right and center. But these are not enough to take us up to new highs or to pull the markets up into a new bull territory. These are just enough to hold back the collapse. So we're not going to collapse, hopefully, but you need a little more effort and a little more on the announcement front. So I think we'll just wait for that and see how it comes through.
Yeah, well, one will be around real estate and then maybe something more. The question though, Basant, is that in light of what the world is going through, is it prudent to even talk about or desire moving back to all-time highs in a hurry? It might be a labored process, but maybe that's the nature of the market. With the world doing what it is doing, we might not find the sentiment around equity markets per se strong enough to move to new highs. It might be great for Indian markets if they fall lower or lesser than what the rest of the world does.
Neeraj, in the markets, we get paid for sticking the neck out of the window than for keeping it buried between the pillow. I think the government has a plan here. They want to do big ticket asset monetization, disinvestment, and use that money for the social schemes. So they're also pushing on the central bank to give them back some of the excess reserves. And why can't the government think like an Indian promoter? Before the QIB, before the public issue, he provides you with the best of the results and then goes and sells some shares. So that's the only place where the government can get some money. So if the government wants to actually promote its social objectives, they will have to ensure that the markets remain fit and fine. If the government thinks that raising 50,000 crores by selling ONGC to GAIL and GAIL to HP and HP to BP, then I think even raising that 50,000 is a problem. So I think there is some plan, and the plan is that I'm not going to put out all my cards right now. Some of them are held with me, and real estate obviously is coming soon, maybe this week or next week. And because you cannot revive an economy by just going and buying cars and buses and trucks, you have to have a multiple pronged attack on the kind of slowdown that we are facing. So let's see what happens, but we don't want an all-time high. All we want is an economy that's functioning normally. And then good companies are going to hit all-time highs, because we don't buy Nifty, we don't buy the index. So if you've got a set of companies that are allowed to function without any external problem, I think that's half the battle won.